Yo, what's up, guys? So today I'm going to talk about the Bitcoin crash and should you still buy Bitcoin in these times. So let's get right into it. Let's get right into the research. So number one, guys, a crash does not equal failure, right? So the short-term Bitcoin crash, it doesn't automatically mean, the asset's value is broken. These things happen all the time, in the stock market, you have a crash, even during the pandemic, you had the crash of Bitcoin. That doesn't mean that the whole entire asset's long-term value is broken. If you believe in the asset long-term, you should still be buying. If you believe in your research, you should still be buying. That doesn't mean that Bitcoin is broken. The market panic and the forced liquidations, this they drive sharp drops more than the fundamental problem. So it could just be something that happened in the market, and I'm going to get right into it to show you exactly what possibly could have happened in the market. So let's get down to the research here. Okay. So the February 5th sell-off, right? It was most likely a technical problem. It wasn't a fundamental problem. So the 14% drop, that appeared to actually be linked to cross asset selling pressure from probably hedge funds. They might have been over leveraged and they're using Bitcoin as collateral. So they probably dropped, they sold a ton of Bitcoin, a few companies, and that caused a drop. So right now, Bitcoin's at around 90K or so from, where it was at before. And that could be a fire sale. Some people will look at that and say, hey, Bitcoin is on sale right now. It's a fire sale. I'm gonna get in. If you believe in it, if you believe in your research that you've done, it is a fire sale right now. So the times when the market looks dry, you know what they say, that is the time to pick up as much stock as you possibly can. So, number three, guys, ETF outflows amplified the decline. So, you know, um, Bitcoin ETF saw about $1 billion in outflows over 2 days, accelerating the downside and increasing negative sentiment. So, Bitcoin ETFs had $1 billion in outflows in 2 days. So, you know what that means? That means that the companies that own these Bitcoins, ETF stocks, and all these different things, well, they're selling off. They're making all the money during the time when everyone else is investing at the top. When the market and the news start talking about Bitcoin, everyone buy. Guess what happened? All these companies came out with ETFs. They came out with Bitcoin. Hey, come and buy this Bitcoin ETF. This is so safe. It's not gonna, we're not going to tank the profits and stuff like that. But look what happened in February 15th. They tanked the profits. They said, hey, these guys are all invested. Let's get out of here. Let's get out of here. Let's get the money. Let's leave. So that's what happened. They had $1 billion in outflows in over 2 days. Forced liquidations can trigger cascades. So Bitcoin was possibly used as collateral in leverage trades, margin calls. They possibly could have forced large holders to sell, creating a domino effect that drive the prices way lower. Like I said, it could have been just used as collateral. People use Bitcoin as collateral. That could also have been the problem, right? Bitcoin also is a very scarce, asset. It's capped at supply of $20 million, 20 million coins, sorry, not dollars, 20 million coins that are unchanged. So, fiat currency, government can print it, right? Government can print the fiat currency every single day is being printed. So Bitcoin cannot be reprinted. You have 21 million coins. They cannot be reprinted. So it's a very limited supply. So it's reinforcing the long-term scarcity, right? So Bitcoin, if you believe in it long term, you believe in what it stands for. Well, that's maybe something that you should look into, right? The fact that it's capped at 21 million coins, and for fiat currency, it can always be reprinted. Um, so we also have, institutional adoption, which is a major growth driver in Bitcoin. If you're still thinking of investing in Bitcoin, so you have institutions that are now involved in Bitcoin, like Morgan Stanley, tons of other different companies, which allows a broader crypto access. So it's also supporting, the long-term investment thing. If you want to invest in Bitcoin long-term, the fact that you have major companies like Morgan Stanley, you know, tons of companies adopting Bitcoin right now. So maybe, if that's a part of your long-term strategy, that's something you can look into. The fact that these companies are now adopting it. They have some of the most professionally educated, smart, educated people working for them. These people are doing their analysis. These people are doing risk analysis. These people are looking at the coin and reading white papers and reading all these different things that the coin has to offer, and they're doing their research, and they're saying, they're showing their managers, they're showing investors, they're showing why Bitcoin is a good asset, and these companies are taking on Bitcoin. And also Bitcoin has a history of recovering. So Bitcoin historically, they've endured multiple 70% and more crashes, and they've later reached a new all-time high. Volatility has always been part of its long-term growth. So if you look at Bitcoin's history, 5 years ago, 6 years ago, 7 years ago, it's been crashing. It comes right back up, crash, come right back up, because people believe in it long term. They use Bitcoin as um, a way of payments. There's some countries that actually install crypto wallets, for their for the citizens of that country, and these people will use Bitcoin to pay rent, pay for food, pay for water, because they'll have people from other countries, like third first world countries, America, Canada, all these different places, sending them Bitcoin, and these people can use Bitcoin to pay for food, water, shelter. So Bitcoin, that could be also a good reason why you should hold on to it long term. And the digital gold narrative also is questioned. So Bitcoin has consistently acted as a safe haven, just like physical gold. In times of economic stress, the investors often move towards traditional assets instead, right? So Bitcoin, it hasn't really acted, as a safe haven like physical gold, because there could be times when uh, you know, the economic situation is not looking good at all. So people are going to use what they have in person. They're going to use gold. They're going to use whatever they can find in their house. They'll sell their old PS5. They'll sell some shoes. They'll sell clothing. But the problem with Bitcoin is that it hasn't really acted like a safe haven where people will just be panic selling during these kind of times, because when the economy goes down, well, what usually happens is stocks go down, Bitcoin goes down, all these things go down. So people, they might sell their Bitcoin, but they're going to be at a very, very low they're going to be at a very low, they probably won't even have profit if they sell, during the down times. So people are going to look around their house for items, right? They're going to look around what they have. They're going to look at their savings accounts. Those are the things that they're going to be relying on. And that is a thing. Bitcoin hasn't really consistently acted as a safe haven. So maybe that can also be something, you can look into as well when you're making your long-term investment on Bitcoin. And of course, long-term risk always exists, right? So one of the major risks, is the cryptographic vulnerability, right? We still don't know long term what's going to happen with this, because with AI out, the future is advancing in quantum computing. This can threaten Bitcoin's security, right? Um, like, you don't know what's going to happen. We don't know if people are still going to be using Bitcoin. They could have a whole nother way of payment systems coming out in the future. Maybe we even get rid of paper money completely. Everything goes digital. Maybe people will have a whole nother device where they could just pay, with, and, maybe it might be decentralized like Bitcoin. We don't know, so that can also have long-term risk in Bitcoin, and cryptocurrencies and stuff like that. So, but, all in all though, buying, if you believe in Bitcoin, it's definitely something that you can still look into. And right now, buying during a crash will always be profitable historically. We've always seen this. When the market crashes, 4 or 5 years later, people look at it and say, man, why didn't I buy during that time? Why I should have bought during that time. That's what people always say. So buying during crashes have historically always been profitable, and you should always be diversified in your portfolio, not to make sure that you're over leveraged on one thing. Bitcoin should always be a percentage of your portfolio, not 100% in. Of course, that just depends on your risk tolerance, but buying historically during crashes have always been profitable. So if you guys like this video, subscribe, like, comment. I'll see you guys next time. Peace.